Good day, ladies and gentlemen, and welcome to the HEG Limited Q2 and FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of all of us at SKP Securities, it is my great pleasure and privilege to welcome you to this financial results conference call with the leadership team at HEG Limited. We have with us Mr. Manish Gulati, Executive Director of HEG Limited, and Mr. Gulshan Kumar Sakhuja, CFO. We will have the opening remarks from Mr. Gulati, followed by a question and answer session. Over to you, Mr. Gulati, for your opening remarks. Thank you, sir.
We seem to have lost the line for the management. Participants, please stay connected while we reconnect the management line. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Yeah, good afternoon, friends, and welcome to our Q2 Financial Results 2021 con call. Mr. Ravi Jhunjhunwala, our Chairman, Managing Director and CEO, could not join unfortunately because something very urgent came up. So he got occupied with that. So me along with our CFO, Mr. Gulshan Sakhuja, we'll be handling this call. This is Manish Gulati, Executive Director, HEG. So I'll begin. More than 1 million lives have been lost due to COVID since the start of the year, and the toll continues to rise. We at HEG have given top priority to the safety of our employees and put stringent controls at workplaces, including social distancing, use of masks, sanitizing, extensive use of online interactions, and work from home, etc. These are difficult times, yet there are some reasons to be hopeful. Testing has been ramped up, as you know, treatments are improving, vaccine trials have proceeded at unprecedented pace, with some now in the final stage of testing. As per the recent data from IMF, which suggests that many economies have started to recover at a faster pace than anticipated after reopening from the lockdown. Hence, we can expect a less severe, though still deep recession in 2020. The World Steel Association, in its recent short-range outlook, forecasted that in the current year 2020, the world steel demand will contract by 2.4% due to COVID pandemic, and 2021 steel demand is expected to recover with an increase of 4.1% over 2020. The post-lockdown recovery in steel demand in the rest of the world has been stronger than earlier expected, but it still marks a deep contraction in 2020, both from developed and emerging economies, with only a partial recovery expected in 2021. In the first 9 months of the current year, the crude steel production has dropped by almost 12%, excluding China, which is having an impact on graphite electrode demand. The electric arc furnace steel production was down in some of the large steel producing regions like Europe, US, Japan, South Korea, besides India, mainly resulting from slowdown in demand. The graphite electrode inventory adjustment, which was supposed to get over by the end of this year, COVID has de-accelerated the rate of depletion of these accumulated stocks. Our results in these quarters were impacted due to lower sales and lower graphite electrode prices due to reduced EAF steel production in the rest of the world, except China. Capacity utilization for Q2 was about 74%. Since the past year, as you know, the electrode prices have been sequentially dropping quarter after quarter to reflect the market conditions. We now expect the pricing to remain stable and improve from the current levels in the next 2-3 quarters. We expect resurgence in demand from 2021 onwards once the impact of COVID subsides, hopefully, and the remaining electrode inventories get consumed. The needle coke availability has substantially eased, and accordingly, the prices of needle coke have come down substantially. We have always been exporting about 2/3 of our production to more than 30 countries, which helps us in diversifying the market risks. We have seen some recovery in the domestic electrode demand in Q2, which dropped by about 50% in April to June period, with improved production levels at major steel companies. We see a gradual improvement both in domestic and export markets going forward into the next quarter. Electric arc furnace production has seen an approximately 2 to 3% compounded average growth rate over a long term, and we expect this to continue as EAF becomes the preferred choice of steel making due to its inherent advantages over blast furnaces like environmental considerations, low carbon emissions, low capital costs, ease of operations, etc. With our 4 decades of experience in business, we expect to be a supplier of choice to all our global and Indian customers. We have taken significant measures to manage our operations in this COVID crisis and ensure the health and safety of our workforce and team members. With this, I would now hand over the floor to our CFO, Mr. Gulshan Sakhuja, to take you through the financial numbers, and then I, along with our CFO, will be very happy to answer any queries that you may have. Thank you.
Thank you. Good afternoon, everyone. I will now briefly taking you through the company's operating and financial performance for the quarter under review. The second quarter started on a positive note with a relaxation in lockdown and gradual resumption of business activities. The company gradually increased its to 74% in quarter 2 FY21 as compared to 45% in the previous quarter. For the quarter ended September 2020, HEG registered a revenue from operations of rupees 323 crore as against 233 crore in the previous quarter, an increase of 38% Q-on-Q basis, and 564 crore in the corresponding quarter of the last financial year. EBITDA including other income stood at negative 25 crore in Q2 FY21 versus positive rupees 35 crore in the previous quarter and rupees 174 crores in the corresponding quarter of the last financial year. The company reported a net loss of 34 crore in quarter 2 FY21 as against a net profit of 11 crore in the previous quarter. The performance was encouraged by improvement in the business activity, which was offset by the lower realizations as pricing continued to remain under pressure. Our balance sheet remains robust with a treasury size of about 1,400 crore at the end of September 2020. The company has made a detailed assessment of its liquidity position and the recoverability and carrying value of its assets comprising property, plant and equipment, intangible assets, right of use assets, investments, inventory and trade receivables. Based on the current indicators of future economic condition, the company expects to recover the carrying amount of these assets. The company is operating its business by optimal utilization of available financial resources and also implemented stringent cost control measures across the organization to conserve cash. The company is long-term debt-free and having a treasury size of nearly 1,400 crore, yielding an average return of approximately 6.5% per annum. The company has adequate internal financial reporting and control system. The company is having a mechanism to continuously review and monitor its policies and procedures to adopt with a dynamic environment. Now we would like to address any questions or queries you may have in your mind. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Ujjwal Agarwal from New Horizons FinServ. Please go ahead.
Hello. Yeah. Am I audible?
Yeah.
Yeah. Now my question is that when I look at the consolidated results of the company for this quarter, the cost of materials actually increased for this quarter. I would like to know the reason for that.
Yeah, if you see in this particular quarter, we have taken a NRV hit, and that forms a part of my raw material consumption. Therefore, that definitely you are observing the increase of raw material consumption on the higher side.
Okay, so that has not been included in the other expenses, but it has been added to the cost of material consumed.
It is a part of cost of material. Yeah.
Okay. Yeah, that is all. Thank you.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hi, sir. Just wanted to know, today, as I see in Steelment, UHP prices of India are at 35% premium to Chinese prices. So does it indicate that Indian UHP prices should fall here on?
See, what I would like to answer this in this way, that they are taking Chinese as a benchmark, that is where the assumption gets wrong, because of course Chinese electrodes are definitely available at a price of 35% lower than HEG prices. But first of all, they are not true UHP products. They are using all kinds of raw materials, blending this, that. So I don't know since when Chinese became a benchmark for all the electrode industry. But the only people and one or two websites and Steelment, and there's some site called Buy Info. So they all keep publishing data, but they're all just comparing Chinese prices with our prices of Indian electrodes, which is not correct actually. It's not an apple-to-apple comparison. So the price is still under pressure, but that doesn't really mean that it is going to go down, and we don't have to actually match the Chinese price for our product, because it's not the same product actually, and customers do understand this. Of course, these kind of news do cause a dampener and confusion in the minds of customers, but all the customers who have used both the electrodes, our electrode or Chinese electrodes, they know what is what. So we are not unduly concerned about that. We are very much aware that they're selling at this price gap which you mentioned.
Okay, sir, that's helpful. And so secondly, what is the trend in needle coke prices in the last 1 quarter? Are they going up, flattish?
See, they have been going down in the last, let's say, now if we count by almost a year. It started early this year, and the prices have been going down, but that is actually not helping us much at this time, because we are still holding sizable inventories of material bought in the past. If we were to get needle coke at today's prices and sell the electrodes at today's prices, there would be decent margins. Our problem is that we have to, till this inventory gets flushed out of the system, which includes raw material, also work in progress, also finished goods, and our processing cycle is so long. I mean, it takes 2 months to make electrodes and 5 months to make the connecting pins. So till all this gets flushed down from the system, we'll continue to, see this pain, which might last for another quarter or so. I mean, this quarter, October to December, and one more. And from April, from next fiscal, it should correct.
Okay, great, sir. Thanks. That's helpful.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Anuj Sharma from M3 Investments. Please go ahead.
Yeah, thank you for this opportunity. My first question is, if I just look at the relation of our company versus our competitors, our relation seems to be low. What would be the reason for that?
No, I don't think so. I mean, if you're looking at our Indian competition, no, it's not low. It also depends on the product list, but it is not low. You have to look at the figures and let maybe Gulshan can explain this better.
For making this comparison, you have to make the adjustment in the competitor results that they are into the other segments also. The graphite and carbon segments includes their other specialities and other segments. You have to make an adjustment to that figure, and then you have to arrive at a GE price electrode, because that GE carbon electrode prices comprises of other that products also, and which forms a part of the graphite electrode and carbon segment.
Okay. In terms of pricing, it seems that we are roughly $3,000 per ton of realization, which we are quoting. You seem that you believe that this was the bottom, or the spot prices are materially different than the realized prices?
This, first of all, the average realization which you are taking, you're dividing tonnage, the revenue by tonnage. Please remember there's a portion of non-UHP electrodes also in this.
Sure. I am just for the sake of simplicity.
Or something. So that you're dividing, but I do hope sincerely that these prices should not go down any further, because the spread between the current prices of needle coke and the current prices of electrodes is now enough for all companies to at least have some decent margins and survive and do good for themselves and survive for servicing the steel industry. So they should not go down, I think, because needle coke pricing has also now reached a level where not further major decline is not possible. So they already went down to the levels which we had seen before it to increase. So there should not be further decline in prices of electrodes, which you are seeing.
Okay. And in terms of needle coke, how more can you expect the costing to go down? In other words, you would be operating on an incremental basis, not on the historic basis, because again there will be historical cost. On an incremental basis, you said you make decent margins. What would that number be? Would that be around $500 per ton, or
No, we'll not. We'll decline to state the specific number, because this is confidential not only to us but also to the needle coke supplier. So I'm very sorry, but we cannot give out a number. All I'm saying is that there has been a decline in needle coke prices, and further major decline doesn't seem possible, because they're already reaching quite a low level.
Sorry, this you are talking about the raw material, the needle coke prices, is it, or the realization?
I'm talking about needle coke first, and of course the spread between the current prices of needle coke and current prices of electrodes is also now at a level that it should not go beyond this.
Okay.
And so that means I'm expecting that this electrode prices to now start bottoming out.
Sure. And in terms of our raw material, is our inventory now marked to the current prices, or there is some more to go? So is our inventory now completely marked down to the current realization level?
If you see, as on 30th September quarter, that inventory has already been marked down to the current selling prices. Now, NRV is a factor of future selling prices. What would be my selling prices for my fourth quarter or first quarter of next financial year? So that would determine the actual impact of NRV in the books of accounts. But if I talk about that second quarter, it has already been marked down to that inventory has already been marked down as per that current selling prices. But in case if there is any further deterioration of selling prices in the fourth quarter or further, then might be a possibility that some impact would come.
Sure. As per current prices, there is no marked deterioration now in the inventory. That's all marked.
For September quarter, we have already taken that hit. If you see the notes to that results, we have already shown the figures, quantum that we have already taken the hit on account of NRV and markdown of inventory.
All right. Thanks. I'll come back for further questions.
Yeah.
Thank you. Ladies and gentlemen, to ask questions, please press star and 1. The next question is from Kirti Jain from Sundaram Mutual Fund. Please go ahead. Kirti Jain from Sundaram Mutual Fund, you may go ahead with the question. Kirti Jain, if you can hear us, we can't hear you. There seems to be no response from the line of Kirti Jain. We'll move to the next question. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Hi, good afternoon, sir, and thanks for taking my call. I just wanted to know something on the new Chinese policy for steel scrap imports, which is expected by the end of the year. What to your mind is the expectation on the new policy? Is it going to go back to the old policy? It's not going to go back to the old policy fully, right? So there'll still be restrictions on low quality scrap imports. How is that expected to affect the industry over the longer run?
No, but India was not a net exporter of scrap anyway. So this Chinese policy doesn't really impact much what they are trying to do. I mean, they're trying to use their own scrap and stop low quality scrap from coming in. So that way, I mean, we as India as a country, we won't be impacted much.
No, I am not talking about the scrap price. I'm talking about the impact of the graphite electrode exports that China is doing right now. So if they are importing more scrap, naturally their domestic industry would consume more of electrodes. Export pressure which is there right now might ease with the scrap imports. That's what I was getting at.
Not exactly. Actually, you see, if China has not kept up the promise of taking the EF share to 20%. You remember there was a 3 years back they were talking that okay, our EF steel portion is going to be 20% by year 2020, and we are already done with 2020, and they are still at that 104, 105 million level. Actually, they should have been at 200 million this year, which would have really eased a lot of problems. In their own internal electrodes would have got consumed there, but I still for them somehow blast furnace gives them better economies. So they did start with a bang. They did increase from a level of 51 million tons production from EF route in 2016, and in 2 years they came to 2008. Then 108 million. Then in 2019 it was 104, and the way they are going this year, the steel production is increasing, but again their reliance is still on the blast furnace route, which goes against conventional logic, because now when the countries develop, the recycling of steel increases. But despite having their scrap, their electric arc furnace production is not still at 10-12%, although it should have been 20%.
Right. So if there is a change in the scrap import policy, you don't expect a significant change in that in terms of the...
No, actually, that's what I was trying to say. Actually, this policy has lesser of an impact rather than they somehow in China, they still find the blast furnace route to be more economical, even if it is environment unfriendly. But probably around $30-40 a ton, that is still per ton of steel made. They still find it more cost competitive, making it through blast furnace route, defying all their earlier policy which they had made that they want to take the production to 20%. They have not done so, while the rest of the world is around 50%. Or rather, to give a very specific number, it's 48%. So for excluding China, 48% steel made in the world is made through the electric arc furnace route. And that is what was expected out of China, to take it from 10% to, if not 40 was a long way off, because that is a country still relying more on blast furnace production. But 20% was not difficult to achieve, and they were putting up a lot of electric arc steel furnaces. So I don't know what they are not keeping up with that plan, that blue sky policy which they were talking about.
Right. Could that also be because of the fact that scrap prices are very high? The current spreads are not attractive enough for the EAF route.
Yes, that is what I was saying. That if you look at the cost of making steel from both routes, the current scrap prices are still not economical for them. Although it was expected that as an economy, when they're maturing and there is life cycle to steel, and steel comes in the market in form of scrap, it should have come. But still the scrap prices are such that they still find blast furnace route more economical.
Right. Thank you so much, sir. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you for this opportunity again. My question is, while the UHT technology was with few players, we heard that China, some players were trying. Any success in China-based players of successful UHT implementation or capacities coming up?
First, I'll answer the technical part. Then, yes, of course, everybody knows that there's a big learning curve in this, and even the same company, just giving an example, even one of our multinational competitors, the world leaders, they set up a new plant in Malaysia, and that plant still gives them a lot of trouble as far as quality is concerned. So it's about this process is such that it takes a while for each company to perfect that with the available raw materials, whatever they have. The needle book is fine, then the pitches are mostly local, the binder pitches, etc. So it takes a while, but the Chinese progress if you ask me on the technical front, has been there are about 5 integrated producers in China. Out of them, 1 or 2 who are able to make electrodes, let's say up to a certain size. Let's say I'll give you out that size up to 24 inches. But it is going to take time. If they really make a true UHP product, they have to use 100% needle coke, take it through a certain process, and then make a product which is equal to that of HEG or other world majors. And that is where they cannot fight on price. The fight comes when we are making different things. If they are using other kind of raw materials or using them in a blended way or something, then they of course cannot make the same product. See, our target is to remain cost competitive. See, these pressures will be there forever. But it's a pricing pressure, not a technical pressure that, okay, they've made a product or that we can't match up with on the quality point. So we have to make a good quality product and stay competitive in our costs. So that is going to be the mantra for the future.
Sure. And what is the amount of quantum of capacity you're talking about in Chinese expansion in UHT space?
In UHP space, if I hazard a guess, they were putting up a lot of brownfield, greenfield type of expansions. I don't know. If let me put it this way, that UHP capacity out of the total, I think they have about, among the 5 players itself, about 6 lakh is what they have. But about, let's say 80 to 100,000 tons capacity would be of UHP. But just having a UHP capacity means nothing. They have to use the right raw materials and they need to have the right technology.
Sure. You explained that earlier. And one last question is, needle coke has always been supplied by very few concentrated guys. Is there any thoughts or any expansion or diversification in the supply source, or that still remains concentrated and is expected to remain concentrated in the next 3-5 years?
See, for the major players in the industry, which is like the likes of Showa Denko and Tokai, these 2 Japanese companies, and Kraftek, which is an American company, and HEG and our Indian competitor. All of these companies are using this standard, proven, years-long history of needle coke from these 3 suppliers. One of them is an American company, P66, and 2 of them are Japanese. Now, when it comes to Chinese, they have their own raw materials. They are putting up a lot of, it's not needle coke as such, it's called, it's a coal tar based, it's pitch-based needle coke. So, in Inner Mongolia, they are putting up a lot of these plants which are going to make this needle coke or the substitute of petroleum-based needle coke from the coal tar-based pitch coke route. So that they are going to do, because if they have to service their own electrode, if they meet their own demand, they are ramping up their local supplies. But that's not petroleum-based needle coke. So these companies who have been in the business for 40, 50, 60 years, they are still using the proven suppliers. But yes, new capacities which are based out of coal tar-based pitch coke are coming up in China.
All right. That was very exhaustive. Thank you so much again.
Thank you.
Thank you. The next question is from the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Sir, in terms of utilization, how you see our utilization expected to move over the next 1 or 2 quarters? We see, given that the demand is improving for the steel sector, how you see our utilization moving up?
See, our expectation for the next 2 quarters, by that I mean the October to December quarter and the Jan to March, we are expecting to be around 70%.
Okay. What is it currently, sir? What was it in July to September quarter?
It was 74%.
So you expect to...
It was 48%.
So you expect to come down, sir?
No. In total, we are expecting to go up. In the first half, it is 60%, and we're talking about 70% for the second half.
No, sir. From second quarter to third and fourth, sir.
Second quarter, third and fourth, that's very marginal actually. I'm just giving an estimate. It should be around 70.
Okay. Like any destocking or stocking will happen, sir, given that prices are expected to move, that will aid volume
ramp up? Anything do you see, or your customers are ordering you more economic ordering quantity?
See, now one positive sign which we have started to notice in the last 1 month is that the customers who were absolutely shy of, just taking more than 3-month call, they are now slowly coming out of their, insecurity and trying to take a 6-month call on prices. Earlier, they were just not guarding their purchase beyond 3 months, which actually means that the steel companies probably now have better visibility of demand. So they are able to, or they are trying to, they are in a position to take a call on tying up their raw materials for, let's say, 6 months. Now, these are early indications, and I hope they sustain, because once we come back to our earlier model of at least being, 6 months, the steel companies used to order 6 months at a time. We used to contract the needle coke 6 months at a time. So that is actually a much better, much more stable environment, rather than just selling 3 months at a time for a product whose cycle itself is 2 months. So there are positive indications. But then again, the current the time and era which we are going through, this COVID thing is so confusing. Europe comes out of lockdown, then again goes back into lockdown. So a lot of things are happening. And let's see, let's hope by March, I think the situation will become much more clear about steel demand of 2021, how COVID, unfolds. Let's see.
Okay. Sir, in terms of our RM basket, from say Jan to March to July to September, is the raw material price decline very substantial, sir?
Yeah, it has, but it doesn't help us actually, because still we are holding our stocks. You have seen our hit we took in the quarter closing March, and again the preceding quarter ending September. So we would have been very happy to get those raw materials at the prices of today and sell electrodes at prices of today, and we would have made good margins. So this pain which we have, as I'm just repeating myself, it takes 2 months to make electrodes and 5 months to make the connecting pins. So it's very natural, and there's all these raw material getting imported. There's always, we have 2 months of the electrodes, actually the furnaces, 2 months of raw materials in our silos, 2 months on high seas, and 2 months of finished inventory gone. So it's 8 months. So whenever there's fluctuation in the market prices, this is the minimum which we have to contend with. The reverse had happened when the prices had shot up. We had these raw materials in the shape of, we had this needle coke as raw material, we had work in progress, we had finished goods. So we had enjoyed that time. So it's kind of somewhat a reversal of what is happening.
So the current prices, inventory, suppose if you buy today's inventory, we would be getting the benefit in next year, April to June. Correct, sir?
Yes, yes. By the time our majority of our inventory, which is in all forms, would have been consumed and sold.
Mm-hmm. Because when we see our inventory, it is like roughly 750 crores. Our quarterly consumption is roughly 250 crores of inventory. Right. So it takes 3 quarters to consume inventory, right, sir?
That's correct. 2 quarters for sure. And then the third quarter, what happens is that we have already started buying a particular grade, so it becomes a blend actually. That the new prices of needle coke starts flowing in, and then some which is outgoing, and it makes a blend actually. So, but you have very rightly noticed that yes. So that's why we are saying 2 quarters for sure. And the third quarter, the new prices will take over. Let's say then we'll be selling 2/3 of the electrodes made out of needle coke or current prices, and 1/3 out of the inventory. So then that will be the return to profitability.
So my last question is, so given that in one of the earlier one of the participants, you told that large capacities are being created in Chinese market, and government is looking for self-reliance for their resources. So have we or another industry along with our industry partners, have we gone and go for some anti-dumping relief or something, sir?
No, anti-dumping relief on electrodes which are coming from China to India.
Yes, sir. Yes, sir.
So far, our answer is no, because when the electrodes were very tight in India, we were actually supporting the steel industry in India, and we volunteered and said, okay, these are very trying times, and we supported the removal of anti-dumping with the hope that actually Chinese will stop this. But if let's say we'll watch the situation for another 6 months, and if they continue to do so, then at the appropriate time we will do that.
But sir, you know the government process, na, sir. It takes its own times, and again, then the injury will be to us and the industry will be very high, na, sir.
That's right.
I mean, once they start the investigation process, then investigation goes on for a year or two, then outcome comes, and then it will be very long. So shouldn't we try now itself, sir?
We seem to have lost the line for the management. Please stay connected while I reconnect the management.
Thank you.
We have the line for the management reconnected. Over to you, sir.
Hello?
Yeah, go ahead, please.
Yeah, so that's it from my side, sir. Thanks a lot, sir.
Okay, great. Thank you so much.
Thank you. The next question is from the line of Rahul Jain from Anand Rathi. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I just wanted to ask that how much does the needle coke constitute to the total RM consumption?
It actually depends upon the selling prices, but as a very rough benchmark, it should be 30% of the total cost.
Okay. And how much would be the other major which other major raw material would be you using in production?
In this business, the next important constituent is power. So first is needle coke, second is power.
Mm-hmm. How much that would constitute to the total raw material cost? I mean,
Rahul, if you see our that balance sheet and also because these are things which are confidential in nature. So if you go and see that our profitability and the balance sheet, so you can clearly work out that bifurcation among that between raw material and other material and power cost and all such things. So we cannot speak specific numbers on particular this costing part.
Okay, sir. Thanks a lot.
Thank you. The next question is from Devang Sangvi from ICICI Securities. Please go ahead.
Hello, sir. Thanks for the opportunity. My question is regarding the destocking trend. Can you just throw some light on what is the pace it is going on, and can we expect that to be over at the customer's end by, say, this fiscal year end?
See, now we are almost reaching the end of it. And whatever the commitment some of the customers had made, actually their own steel production dropped by about 25%. So that is why it caused them a lot of problems. So I think by March we should have majority of the situation behind us. majority of it. Actually, it should have been done by now, honestly speaking. By September, we were expecting that this inventory overhang should be out of the market. But because of this COVID thing, it's taking longer.
Right, sir. And this Indian demand has picked up quite a bit of last, say, 2-3 months in terms of the steel production in India. So has that helped of late?
Yeah, it has helped some of the volumes. But India is only, let's say, out of the 100 million tons, there's only 30 million tons from electric arc furnace route, and rest are still blast furnaces. However, electrodes are also used in them for the refining in the ladle furnaces. But as the capacity utilizations have improved in India from a level of, let's say, 60% in April to June to about 80% plus now, 80 to 85%, certainly we have seen a growth in demand, electrode demand in India also.
Right, sir. That was helpful. And on the capacity expansion plan from 80,000 tons to 1 lakh tons, are we delaying this particular expansion or maybe by 6 months or so? Or
No, we just put a temporary hold on it for, of course, the equipment has been ordered, everything is on the way. We just stopped the work for a few months. One reason was COVID. We were getting about 1,000 workers inside the premises every day. That was increasing a lot of risk as we don't know where they come from. So that was one major reason, because we were having a lot of issues with the government rules that work with 50% people. So we had to just put the civil work at stop. Rest of it, all the long lead equipments which were ordered are very much on the way. So we will just look at the right timing and re-begin.
right, sir. So how much capex will incurred in H1 and what is the plan for the full year, FY21? Sir?
Devang, in H1 means approximately, if I talk about till date, we have approximately spent 150 crore plus on that. And in next 18 months, we are expecting, because LC all committed amount to the supplier in the form of LCs. We have already opened that LC. So in next 18 months, that amount, the cash outflow would be in the range of around 200 or 225 crore, like that. So the total spent would be around 400 crore. Means 150 already spent and 200 or 225 in the pipeline, and that will be spent over a period of next, you can say, 18 months.
Right, sir.
And we have been reviewing the situation, and on the basis of that, then again we will take the call how we have to proceed further. Based on that, we would see the market situation, demand, supply, capacity utilization of all electrode players. Then we would again take how we have to proceed further to spend more or not.
Right, sir. And YTD, how much you spend on the expansion year till date in terms of total capex?
Yeah, please come again.
YTD total capex on the expansion plan from 80 to 1 lakh. How much you will spend up till now?
Around 150 CR. We have already spent it.
150 CR. That's the number. Okay.
Yeah, we have already spent it. Yeah.
Right, sir. Okay, sir. Thanks a lot and all the best.
Thank you. The next question is from Kirti Jain from Sundar Mutual Fund. Please go ahead.
So just one clarification. In the inventory which has been marked in the books, is to the extent of net realizable value or marked to the near to the current purchase price?
If I talk about WIP and FG, means we have done it as per that India's, and what they say means we have to mark down to at the net realizable value. So all my WIP and FG, the hit that we have taken in the books of account in the first half, that has been marked down till to the level of selling price.
Okay. RM would be at the near to the current price as on the September 30th, sir. RM would be marked to that.
RM already we have taken the hit in last financial year, but now the question comes, if there would be a further deterioration in selling price, then the call we have to take on the basis of that accounting standard, how much hit that would come into that profit and loss account. But as on September means that whatever that amount we have taken around 30 crore, that is based on our cost of production versus selling price. The amount that we have already taken the hit of 30 CR in quarter 2.
No, so what I meant, so RM would have fallen from say June 30th to say September 30th. RM would have fallen, right, sir? But we would have purchased, suppose,
in July.
I understand. I have bought a RM at X price, and it has come X minus delta on 31st of March. So we have already means taken a hit of X minus delta on 31st of March. And again, if there is a further downward revision in the raw material prices, that has not been accounted for. That has not been accounted so far, because the NRV does not trigger at that particular price, but that is going to affect that EBITDA margin, because still that raw material is on the higher side, what we valued on 31st of March 2020.
Okay. Thanks, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Good evening, sir, and thank you for the opportunity. Just to take forward the conversation from the previous speaker, sir, if we take this written down part, then it is up to September. That is, as on 30th September, whatever inventory we were carrying, that gets marked down to the prices for both raw material as well as the finished goods. Yeah. And sir, what have been the trends, sir, for the month of October and November as of now? Has the prices declined further from whatever markdown we have taken?
Sir, if I talk about October or November, the prices are more or less similar. But now the question of NRV comes into the play when the future selling price, if I talk about the fourth quarter of this financial year or first quarter of next financial year, in case if the prices deteriorates further, what we have taken on 30th September, then the question of NRV comes into play, sir.
Come again, sir. I just missed your part.
In case if there would be a further deterioration of selling price in the fourth quarter of this financial year or the first quarter of next financial year, then there is a possibility a further hit of NRV would come into play.
No, so when you close the quarter in December, then also the NRV will definitely play as on 31st December, whatever will be the selling price, you have to mark down or mark up the same.
Sir, now the question comes, NRV has to be calculated on that the closing stock we would have on 31st of December vis-a-vis the selling price for the next quarter. For the next quarter means for the fourth quarter of the financial year. In case if that prices of fourth quarter further deteriorates, correct, we have to take a further hit in that balance sheet in third quarter, sir. But whatever the hit that we have taken in the books of accounts as on 30th September, that is based on the selling price that we are having for this third quarter.
Third quarter.
Yeah. But, sir, we have to judge and we have to evaluate quarterly basis what is my projected selling price for next quarter or next 4 months or 5 months. Because in the current market scenario, all the orders are in the range of 2 or 3 months, maximum 4 months. So that's why we have to take the call on quarterly basis. This is my projected selling price and this is my coming the cost of production. We have to take this much of amount as a NRV in the books of accounts in a particular quarter.
Okay, sir. And sir, currently, sir, I think so. As you articulated by you, it is the needle coke prices that have corrected to a greater extent. So, sir, with this fall, has that depressed the graphite prices equivalently, or the fall in the graphite prices have been somewhat less arrested than the impact of the fall in needle coke?
See, the electrode prices were skyrocketed. Of course, needle coke prices also, but the delta between the spread between the prices of needle coke and the price of electrode in 2018 was very high. Now that is getting corrected. That was peak spread at which we were at 75% margins, which is unheard of in any industry, which was unusual and once in a blue moon type of an occurrence. So of course the needle coke prices have come down, but electrode prices have come down even further. But they are actually returning to reality. That is how it has been in the last so many years of our existence, that the spread between the needle coke prices and the electrode prices should be such to be able to give us healthy margins, and rest come from volumes, where anywhere between 25-30% margins is considered good in our business. So that if you have the volumes after expansion, So that will give us good profits.
So that will play out only after in the first half of next financial year. This benefit will not be attributed to our numbers for the December and the March quarter. This is what
Absolutely correct. That's what I said in the beginning, that there will be 2 more quarters,
two more quarters of pain.
Two more quarters of pain. Exactly, you said it. Yes.
Okay. And sir, for the price trends, for electrode price trends, what have been the price trend for, say, for the month of September, October, and as of now? If we take the spot prices into consideration, what are the trends indicating?
There is still a pressure. If you are talking about the trend, then let's say between September, October, there was not much difference. But when we start booking further orders, there's going to be some more pressure on the price. But we cannot indicate the specific number. But of course, you can always make some estimate from our revenues and capacity utilizations. But please do remember that there's a product mix. We have certain non-UHP portion also in this.
Correct. And for the sales mix part, sir, how much is domestic and export? For the first half?
1/3, 2/3. It keeps varying. Sometimes it becomes 35%, 35% India and 65% export. It keeps varying actually. Anywhere between the Indian sales vary between 30 to 40, and correspondingly export sales between 70 to 60.
And sir, for us,
quarter on quarter.
And sir, for us, sir, the key domestic players, our buyers are SR and Darshan?
Yeah, SR, JSPL, Jindal Stainless, Tata Steel Authority, and many alloy steel producers like Vardhman Steel, Mukund, Kalyani.
Okay.
So again,
all across the board, sir.
Yeah. Anybody who has an electric arc furnace in India is using electrodes is our customer. Almost everyone.
Correct, sir. And sir, for the utilization of cash, sir, since Ravi sir is not here today present, so sir, what are we exactly will be doing to do with the cash? Definitely expansion is there. We have put money for the capex. Other than that, any way in which we are trying to reward shareholders, because right now the business sentiments are sour for the industry. So the investors who are there in the journey with you, in what way can they be rewarded?
From a reward point of view, if you see last 2 years, the company made a good profit and has rewarded that to all the shareholders in the form of dividend and also in the form of buyback. The payout ratio was in the range of 32-33%. And if you see the trend of last 7 or 8 years, the company has always rewarded to the shareholders and have made this payout ratio to the tune of 30-32%. And once that we come into black, that means once we come into that profitability and come out from this loss figure, definitely we would try to maintain the same payout ratio for the shareholders. And as far as this, yeah, sir.
Sorry. You continue, sir. I'm very sorry. I interrupted you.
So as far as we are expecting in this financial year, if you see the first half, and because of COVID and plus because of this high inventory, we made a loss in first half, and we are expecting that this financial year 2021, from the profitability front, it's a difficult year. But from the balance sheet point of view, if you see that the overall treasury position has been strengthened by 300 crore from March to September, and going forward by March 21, it is going to be further strengthened. And as far as the other business part are concerned, what you just said, we have already evaluated 2 or 3 or 4 proposals, but ultimately the management decided to go for expansion. Now because of COVID and all such factors, so that is put on hold, and we have been reviewing. And once that the market comes into normal capacity utilization, steel companies comes into the normal capacity utilization, then we would try to put this money and for this expansion from 80K to 1K. 100.
Right, sir. And all the best, sir, to the team, sir.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you. Participants who wish to ask questions may press star and one. The next question is from Anubhav Sahu from MC Research. Please go ahead.
Hello. Hi, sir. A couple of questions. One is regarding China's graphite electrode production. I think somewhere you mentioned that the UHP grades from China production is of the range of around 80,000 to 1 lakh tons. Though of course, it is made from a different raw material source. So wanted you comment on how is the acceptance of Chinese UHP grade in global market now? Is there any marked change in perception over the years? This question is coming with the context that because, if I remember right, it was not seen as a key competitive product for us. So is it that UHP?
I would say, because you see the steel companies need reliability of supply and a consistent quality performance over years. It's very difficult to change. Normally, customers, they need 2-3 years worth of experience to, just change and award a major business. Giving a 10% requirement or a 5% requirement, it doesn't mean much until the customers are sure and they know that they will get the same quality year after year, that they can allocate 30, 40, 50% of their business. So the acceptability of their product is still low, I would say. It's not that, they're also an approved vendor. But yeah, if they go in the market with a 35% lower pricing, it does put some pressure on us as far as only pricing is concerned. Because customers do ask us, and they also get doubt because they also call the product a UHP product, although we know for a fact that it's not a UHP product cannot be made at this price, made and sold at this price. If somebody has used prime needle coke from these primary suppliers, then they actually cannot make it at that price at which they are selling. So we know that it's not that. And customers also somewhere, but they at least, customers give them a trial here and there. So there is some limited acceptability in some furnaces which are not as strong, weaker, or customers who want some saving upfront. That's about it.
Okay. So other than quality, is there any other requirement which the Chinese UHP warrant from the end client? For example, if of course it goes for electric arc furnace, but is it a different make or different different size of electric arc furnace which is more suitable for what China caters to? Or is it?
For the lower diameters, they can still give their value proposition, sell at 35% cheaper and still give a 10-15% higher consumption. And for lower sizes, they still make it, but actually the world demand is more towards the bigger diameters, where they are still not as successful.
Mm-hmm. And so just to bring a context, would you have a number, approximate number, that what would be total global UHP grade production X of China? Or capacity?
It should be around, let's say, the capacity would be around 700,000 tons, excluding China of UHP electrodes. But again, at present, the industry is working at 50% capacity utilization. As an industry, I'm saying, counting all the suppliers put together.
Right. But this is the total graphite you're talking about, or the UHP grade? Can you make a distinction that way?
No, I'm talking about all the players, all the major UHP players. About the country, I've already told.
Okay. And so, though, of course, China did mention about 20% target for steel production through EF route, and there's a apparent delay in that. So how much in percentage, how much is right now the production through EF route in China?
It's about 105 or something. When we close the year, we'll get the figures. But I think it's going to be around 105 million tons, which is, let's say, 10-11%. Or it should have been 20. So for 20, it means a lot. Another 100 million tons would have absorbed 200,000 tons of electrodes.
Okay. And about this, sir, again, coming back to the same figure, the 100,000 UHP production from China, would you have an idea how much of that would be exported from China right now, given that there is a delay in EF route production?
Must be around 50 to 50%. Because, 50 to 60%. I don't have a hang of those figures from China, really, but that should be about it.
Okay. Okay, sir. That's quite helpful. Thank you so much.
Thank you. Thank you very much.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Manish Gulati for closing comments.
Yeah, thank you for listening to us, friends, and we look forward to speaking to you again with better visibility next quarter. Thank you very much.
Thank you.
Thank you very much. On behalf of HEG Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect.